I went to a firm called ACPI, which is a cabinet manufacturer. And when I joined, it was actually losing money, and it was that within 3 months we got it to break even. Over 8 years, we grew it from I think it was like 120 million in revenue when we started, and we exited at 1.8 billion in revenue.
Your data has secrets. Secrets that could change everything if you only knew where to look. Welcome to the Data Secrets Podcast. Welcome to the Data Secrets Podcast, where we uncover how business leaders crack the code, find truth in their data, and turn insight into action. I'm your host, Nathan Sedembrini, and today we have Michael Franklin. Michael is a multiple-time CIO with multiple exits in private equity, now turned investor. He's the founder and managing partner at Cold Iron Capital, and he's so confident in technology as an accelerator for business that he's buying businesses and driving performance with data and technology. Mike, welcome to the podcast.
Yeah, thanks, Nathan. Happy to be here.
Awesome. So for the audience, I imagine some people might know a bit of your story, but most people probably don't. And so could you just introduce yourself a little bit more, kind of what you're doing now and also how you got here?
Yeah, no, happy to do so. So for about the past 15 or years or so, really been focusing in the private equity space, working primarily on turnarounds in a CIO, CTO type of capacity. The PE world is exciting. It's, stakes are high, timelines are high, the reward is potentially high as well. So that's been a good run. Had a lot, learned a lot, had a lot of fun there, met a lot of great people. And recently transitioning out of that CIO, those full-time CIO roles into more venture investing, doing a little bit of mentoring of some kind of up and coming tech leaders, as well as like you mentioned, I'm strong believer in technology and data's ability to help companies grow. And to that end, myself and some friends are sort of looking to start some ventures or buy some businesses and help them grow through technology and data. So
Love
kind of
it.
how I got here, probably not exactly a straight line. I'm sure a lot of people could say that. People have far more interesting stories than a lot of them realize. And I'm no different than that. So early in the career, spent a lot of time in the trenches, startups, doing traditional technology type of roles, some development, infrastructure, those kind of things. Had some decent success there. Had a lot of great opportunities. A lot of people that believed in me, a lot of people that helped, kind of pull me up. And that culminated into an opportunity to pivot out of technology and into a pure business management role. So assumed sort of a couple different assignments over the course of several years at a company called American Gypsum. And, those, I will always be thankful for those roles and those opportunities that they provided, tons of great lessons learned, right? You think you understand something until it's your responsibility. Then it becomes real, right? But I sort of woke up each Monday morning just dreading going to work, in this more general management type of role. It was very humbling going from like rock star tech leader to, man, I'm not even sure I should be in this. I'm qualified to be in this room or in this meeting. So I had several years of really fighting that imposter syndrome. And, it was a tough couple of years. I learned a lot. And one of the most important things I think there was, hey, I picked up a bunch of knowledge that's just great for an IT leader, great for a CIO to understand what the business itself is trying to accomplish in a functional area. But I definitely realized this is not what I want to do for the next 20 plus years, right? So one day, just literally, honestly, I was probably trying to avoid answering emails, or something like that, and scrolling through LinkedIn and came across a role for a CIO role at a private equity backed manufacturing firm. Turnaround situation, high risk, high reward, and something about it. I'm like, hey, I think there's something there. Met the team that was involved in it on both the operator side as well as the PE side, and immediately, the spark was there. I was like, oh hell yeah, this is what it's supposed to be like, right? Like, everyone was super hungry. Everyone was open to any idea. Wanted, like when it just focused on winning, right? And big ideas, big plans. And I'm very competitive. So that really, sort of turned my lights, kind of put the brights back on and reinvigorated a little bit. And I immediately pivoted over there, sort of thanked my bosses at American Gypsum, saying, "Hey, I really appreciate everything you did," and went hard into the PE space, and kind of haven't looked back since. With that, I went to a firm called ACPI, which is a cabinet manufacturer. And when I joined, it was actually losing money, and it was that within 3 months we got it to break even. Over 8 years, we grew it from I think it was like 120 million in revenue when we started, and we exited at 1.8 billion in revenue. So like
Whoa.
a hell of a journey, and a lot of acquisitions and a lot of organic growth. And we're able, lucky enough, we worked hard. We had a little combination of, work hard, the right mix of people, and some luck, right? Like I'll be the first to admit, like there's more to luck and success than people probably want to admit to. But
Yeah.
we ended up having a 28x return for the PE sponsor, which
Wow.
ended up being the largest in their history. So it was a hell of a return, hell of a chance. We learned a ton. I learned a ton. I met some amazing people at both ACPI and then later Cabinet Works, as well as the folks, the men and women inside private equity firm that was the owner. Amazing people, incredible intellectual horsepower. Like I think I do okay. These people were like off the chart, above us. Really smart. So learned a lot of great things from them. So that's kind of what brought me to today. Is I liked that first bite at the apple and went back a few times and have served in similar type of CIO turnaround type of capacities or digital transformation, kind of very similar, and have sort of did that a couple more times and brought me to today. Whereas I'm in fortunate enough position to be able to kind of close that chapter of full time CIO and pivot to doing something a little different going forward. Investing, more venture investing. Like I said, some of my friends and I are very interested in buying some smaller businesses that we could really leverage with technology and kind of seeing where that goes, right? Like who knows? Who knows?
Yeah.
You know?
That's
Yeah.
awesome. Yeah. So just to kind of focus on that transition from kind of general management into CIO level leadership. What was that transition like? And if someone's listening who potentially wants to plot their own path to be a CIO, like what tips or advice would you give for them?
Awesome question. So looking, I've thought about this frequently. I've been asked frequently, by people like, "Hey, how do I get to a CIO chair?"
Hmm.
And there's a bunch of paths. Obviously, you have to command some deep knowledge in a technical area, and then have to have a pretty good understanding across the other major areas in technology. But I think more than anything that really would set a candidate apart is some time in service in some type of business role. And this is often like if you look at a traditional CIO, you'll often see they come from a consulting world. They'll come out of one of the big consulting, just because it's those roles that give a CIO a ton of exposure to actually like being embedded in a business function for some period of time, like solving that business function's problems or solving customer problems. So I would say, if at all possible, if someone has that ambition to go that VP of IT, CIO, CTO route, especially more the CIO route, if you can convince somebody to give you an opportunity, give you assignment to run a like a part of the actual business, even customer service, work in the marketing, work in sales operations, rev operations, manufacturing operations, find somewhere where you're like, "Hey, can I get a 6-month assignment over here and really, really get embedded in it?" Those opportunities provide so much insight and experience that when it does come time to interview or be considered for a CIO position, you're going to be talking the same exact language as the people that want to hire you, right? So it's, that because oftentimes, as you know, us technologists, we love our acronyms. We love all of this very specialized jargon, and we forget we're the only ones that care at all about that jargon. And the rest of the business is like, "No, man, I'm just trying to get this problem solved for our customer," right? And so that exposure, if a person can get that exposure in some way, I think that provides so much benefit to them down the road.
Yeah,
Yeah.
that's awesome. And then, so you got into this PE world, and you had this amazing exit, like 28x ROI. Like that's insane.
Yeah. Yeah.
uh,
Yeah. It really was once in a lifetime kind of thing,
yeah,
It's,
yeah, that's
yeah.
really awesome. And we'll unpack how you guys did that. I think that's probably going to
Yeah.
be the meat of what we talk about.
Yeah.
And so that cabinet manufacturing, I imagine that that business, a lot of moving parts. Um,
Literally. Yeah.
yeah,
Yeah,
literally.
like in our main factory, the flagship factory, in any given time, there were about four to 500,000 parts that were like work in process that
Wow.
were inside the factory campus at any one time. So yeah, it was cabinet manufacturing, like anything. Cabinet manufacturing is far more complicated than people realize, right?
Yeah.
Yeah.
And so then in your later roles, you were CIO of other manufacturing companies. Is that correct?
Yeah, so I've had, I started my time at American Gypsum, kind of going back to manufacturing executive
Hmm.
roles here. American Gypsum, manufacturer of drywall. Most people know it as sheetrock.
Yep.
That's like a brand name, but and then ACPI, which later became Cabinet Works with a merger that we can talk about. And then a few sort of smaller consulting type of roles in aerospace and some other things here and there. And then my most recent time was in a steel based manufacturing firm, manufacturer of steel deck and steel joist, like highly engineered, very complex manufacturing situation. So yeah, I've spent a lot of time in manufacturing. By far, the bulk of my experience is in manufacturing. That's
Mhm.
honestly, I think it's extremely interesting. It's great to go out on a shop floor and watch people build an actual thing,
Yep.
like point to it, like, hey, we did all that work today, right? Like that's fun.
Yeah.
That's really fun. Yeah.
Yeah. My actually first role out of Georgia Tech was at a German, like a high end kitchen and bath manufacturer.
Okay.
And so they would make everything from toilets and sinks to furniture, bathroom cabinets, kitchen
Yep.
cabinets, that kind of stuff.
Yeah.
Company called Duravit.
Okay.
And it was, so I did that after engineering and got 4 years under my belt before going back to business school.
Mhm.
And that seeing everything from the manufacturing side to the distribution, after sales support, customer service, all of that. I had so much context to tie business school to,
Yeah.
way more than if I had, maybe worked at a software company or something like that. Because I got to
Yeah.
see it and be around it is really cool.
Yeah, I think that's important, right? I got an MBA as well, and I had sort of two options of, when I graduated with my undergrad, it was, hey, do I go into the workforce and try to like learn stuff, or do I just go back to school and get an MBA? And I'm very thankful for some people who are like, oh man, you need to go and get some experience in the
Hmm.
real world for a little bit,
Yeah,
and you'll get a heck of a lot more out of an MBA program. And I'm so thankful that I took that advice. And to your point, with that context, it just makes so much more sense when you're going through those programs.
for sure.
Yeah.
And so I imagine some people are interested in this PE world. I know it's caught my
Mhm.
attention the past 5 years. I'm curious. So did you end up kind of sticking with one PE firm and they just kind of moved you around, or does that experience with that amazing win, did that then allow you to go to another PE firm and say, hey, I'm your CIO, put me in place, put me
Yeah,
in
so
coach?
yeah, exactly. It's like once you become a proven commodity, because not everybody like anything, not everybody enjoys working in certain environments, and a PE backed company is a certain environment, just like a startup is. That it has, very clear. I really enjoy it. It provides a lot of clarity and sense of urgency, and a willingness to win and willingness to try things. So it's a very good environment for some people. And for those people that think they have that interest, yeah, once you kind of get your first proven stamp, then yeah, you kind of you are often reused, right? And I have primarily done work for a single private equity firm out of New
Mhm.
York called American Industrial Partners. They're the largest PE firm in like an industrial slash manufacturing world. And I think private equity sometimes gets a bad rap. There's a few, like anything. There's a few people out there that are just whatever. They don't paint the industry in the best light. That's the vast minority.
Yeah,
most of the people I've met in PE, very intelligent, very driven, good people though. It doesn't mean they're not good people. They're trying to do big things, just like in the excuse me, in the startup world. You find the same people in venture capital. They're out there trying to make their dent. The old Steve Jobs
hmm
trying to make a dent in the universe. They're doing the same thing. They're just doing it with businesses that are already built. And AIP, American Industrial Partners, they have I always thought it was a very catchy or very real tagline of they buy good businesses that are having a bad day, right? Good businesses on a bad day.
I love that.
And that's really what they do. You'll see on the press people, again, news likes to badmouth anything because it sells. But PE firms really are the ones I've dealt with. They're very invested in the people, the companies, their communities that those companies are found in, and they're trying to do everything that they can to make sure those companies can win. They build them better. So you got to remember a lot of the investors that are behind companies like AIP or BlackRock or larger ones. It's retirement funds. It's California teachers retirement. It's New York pension, right? So they're investing on the behalf of a lot of Americans. It's just people don't really kind of put all those things together.
Yeah.
Yeah.
Cool. All right. Well, let's start talking about some of these. I think we should focus our time on the ACPI cabinet works.
Hmm.
Um, and so maybe dusting off some cobwebs here because
Yeah, yeah. It's going
uh,
back a little ways, but no, we're
yeah,
good.
yeah. And so when I start thinking about data analytics, like trying to understand what's happening in the business, uh, the most important thing is to kind of start with the business first. And so, could you help our audience understand, the cabinet business? Who are your customers? What's the
Sure.
business model? How did you guys differentiate? And then I do want to get into like when you stepped in. We'll get there in a second, but
Yeah.
but
Yeah.
just kind of looking at the cabinet business as a whole.
So, classic manufacturing, discrete manufacturing, which just means, we're building a single thing out of a bunch of other discrete parts. So really what made it different here, so manufacturing based out of one very large campus facility, and then there was multiple channels of distribution. So, a traditional distribution channel, a dealer channel, which would sell more like repair and remodel. So say Mr. and Mrs. Smith want to do a remodel of their kitchen, they would go to a local dealer in their area. That dealer in turn would design the kitchen and then sort of pass along those custom cabinets to ACPI, the company I worked for. So that was a very traditional. And then there was also like a new construction. So either like you go out and you buy a Pulte home or
Yep.
something like that. That would be another avenue where we would sell product into, and then multifamily. So big high rises, universities, dorm rooms, that kind of things. So it's those are the main channels really. Is that you have one that's distribution, you have one that goes for repair and remodel in the dealer community, and then more basically new construction essentially. So that's the sort of underlying structure of that business. The cabinet business, like I said, it's a very tough business, very competitive, a lot of fragmentation in that market. There's big competitors like CabinetWorks and others that are in that space, and everything down to a one man or one woman shop, building one box at a time, right? So
hmm
there's still a lot of fragmentation. So the top three or so folks, still only command a minority share, right? So there's a lot of price pressure for that business, very competitive, and service. Most I guess a lot of people probably don't realize when they think cabinets that they probably go into a Home Depot and just see a cabinet in a box. You pull it off the shelf, you go to your garage, you install it. The majority of the cabinet business is made to order, right? It really is. They're making this one cabinet and configuring it for a particular order, particular house, particular kitchen. So there's a lot of complexity in there, and being able to take your product catalog and then make it configurable in a very unique way so that it satisfies the needs of the customers. And all it wasn't just us. All cabinet manufacturers have to deal with that level of complexity.
hmm
And really, what we found very quickly, kind of pivoting into the, what did I find when I started there? Luckily, a lot of our, the business that we started at was actually a carve out, a divestiture from Armstrong World Industries. And kind of like, hey, here's our cabinet business. This is a very common thing in private equity. Of a larger business is like, hey, this isn't strategic anymore, and they find a new home for it. Oftentimes, a private equity firm buys it. So we got there, we landed, and it was, all right, how does this business work? Like what's broken, what works, who are the customers? And it's a lot of like, hey, where's the bathroom even? I'm just, it's trying to find your ground. And it was, I would say pretty quickly, we realized, one of the things I've always, sort of been trained or more drifted towards is the customer, kind of start at the customer and work backwards of,
Mm-hmm.
what do we look like from the eyes of the customer, and is there any way that we can measure our performance, and kind of have a good proxy for like, are we doing right by our customer? Are we meeting what we promise, right? So that was where we started, and tried to gather data. Luckily, we actually had an old legacy system. It's like God love these legacy systems. Some of them are actually pretty good. We had an old AS400 based system that had a DB2 behind it that had an incredible amount of like raw data there to work with, and kind of we iterated several things and were able to come up with a metric that helped us track sort of our first really important KPI, which was on time complete. And it was, did we gave a promise to a customer of when the product is going to be delivered to them. And we also made a promise of it's going to be delivered complete. You got to remember, like in that business, especially because we're just a player in a much larger either project or value chain. Like if you're building a home, we have to be in there before other trades like the countertop and other folks can come in and complete the home, right?
Mm-hmm.
So, this whole timing aspect and completeness aspect ends up being extremely important, more so than price even that we found. So that was really where we started, Nathan, is trying to, all right, let's measure these orders. Let's make sure every order goes out the door on time and as complete as possible. And that's where we started. We started building more and more tools around that concept, to where eventually we matured and had, kind of at all those major points on the shop floor, some type of scorecard or report that gives that like real time feedback to the shop floor that understand like, hey, at the top level, we're measuring on time complete for like an entire day. And then, you can click on that and it broke it down into like more manageable parts. And then eventually you'd have like localized dashboards to help people manage their local area, and it all rolled up. So it worked very well. It was pivotal. And that whole concept of managing, we tried to make it so it was, almost no training needed. If it was red, something was bad, you clicked on the red thing and you figured out why it was red, right? We
Yeah.
really tried to make it easy so that people could spend their time solving rather than trying to decode some who knows, archaic report, which I'm sure you've seen all number of.
Oh
When you
yeah.
inherit stuff, you're like, man, you guys couldn't have made this more complex if you tried. How about just like putting this in plain English? Um,
Yeah. So
yeah.
in terms of data sources, so that AS400 system is effectively acting as your ERP. Is that
Yeah,
right?
so the AS400 was the ERP.
Okay.
Again, it was your classic legacy, green screen, the whole deal,
Oh
man.
yeah.
Had a few web apps, but like it was green screen. And we took that, and kind of the first iteration was, hey, can I just quickly layer over some tools just to proof of concept, and then once we're like, hey, this is working, let's start building a more traditional data warehouse, and start like kind of, hey, we have real time reports, but we also need to start gathering up some more, data warehouse type of stuff, put it in some OLAP cubes, that kind of solution. But yeah, no, that system did really well for us, and we got a lot of value out of the old. And that was one of the things coming in. A lot of some of the folks at AIP were like, hey, we heard maybe. And I think they heard this from the former parent about this old AS400. It needs to be thrown out. It's terrible. And that was one of the first things we looked at is, hey, is this thing actually, and is this fine, or is this workable, right? Like, so I'm much more of a type of, hey, if it's not broke, like let's not go through like what ends up being usually the most traumatic thing for an organization ever, which is an ERP change. and like let's just make it work, like I'm pretty
Yeah.
sure it works. And that was one of the other things we proved right away is this thing works just fine. It just, people need to use it, which is a common, no matter what ERP you use, it's often underutilized in many areas.
Yeah.
Yeah.
So I imagine that system was tracking everything from your customers, their orders, bill of materials, inventory, like
Sorry,
all of
so
that stuff. Is there anything, were there any other like adjacent
yeah,
systems that tracked other
there
things?
there was an adjacent system. Good question. So we had a CRM, Salesforce.com was the CRM. So that was essentially the front end where, opportunity management, lead
Mm-hmm.
management, kind of captured that initial backlog and
Yeah.
contracts and stuff like that. And then once those contracts were won and those contracts started turning into orders, they would then flow over to the S400, right? Just a real simple integration between the two. And that was it. It was luckily a very simple environment. I know, hey, we've all been there. Of you inherit something like, it's just, everything's everywhere. But
Mm-hmm.
luckily, in that case, everything was in one spot, right? And the core, the system of truth was really that AS400, and then it was augmented by a CRM, Salesforce.com. Worked really well.
Nice. Yeah, I was going to ask you if the if the integration was a swivel chair integration, where
Yeah,
you
so I've
type it
been
over
there
here,
too,
type it
right?
over there.
You have somebody like, oh, okay, now I got to go integrate. Sometimes that is the right answer, at
Yeah,
least temporarily. But this was a more traditional event based. Sort of some of it was scheduled, some of it was event based. Yeah,
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 that's interesting.
yeah.
Cool. Yeah, you talk about sprawl of systems. We did a discovery for this SaaS company, and you would not believe. So in our discoveries, we start to map out like what are all the source systems. Where
Hmm.
does the data come from, right? That's kind of like the
Yeah.
second question after we understand the business and the stakeholders and what they want to know. Um, but we start mapping out all the where all these source systems are, and there were like dozens of point solutions that this company had kind of cobbled together. And I think that's kind of like a modern problem that a lot of companies face.
It is, and it's been a problem for a while. So many of these SaaS solutions, they usually do one thing and they do it really well, and they're
Mm-hmm.
easy to buy, easy to sell, all that kind of stuff.
Yeah.
And very little consideration is given to, like, how the hell am I going to make this thing like fit inside the application portfolio gracefully, right?
Right.
And then what do we
Right.
do with the data? Like this data now has to like stuffed somewhere. Yeah, so that's a problem, and it's one, frankly, we faced later on at ACPI when we kind of stabilized that main campus and really started growing and getting some traction. Uh, One of the next things we pivoted towards was a pretty aggressive M&A strategy, right? So
Okay.
again, I said it's a fragmented industry. There's lots of opportunities out there to buy other businesses and other brands and kind of put them under a single portfolio. But with those M&A acquisitions, as you would imagine, came all different systems, all different ERPs. Everything was, so we ended up at the very end of it when we sold, there were, I want to say, 21 manufacturing facilities, and I think we had 9 different ERP systems, kind of along with, their own ecosystems. And so that
Oh,
was
wow.
that was one of the initial challenges after our merger with Masco Cabinetry. We combined ACPI and Masco Cabinetry together to form CabinetWorks. That was one of the first tasks at hand, was how do we we knew, and everybody had a dependency on good data to make data driven decisions, and that initial, like, how do we build a data warehouse and how do we build a business intelligence platform that really can like scoop up everything as much as possible, standardize it, kind of make it all this, the same language, and then do something meaningful with it.
Yeah.
And some systems, like not all systems, could provide the data for an on-time complete report. Right. So like that effort spawned a whole bunch of other side projects of, okay, either, they need to pivot over to one of the core ERPs, or we need to figure out how to get that data, the on time complete data, because it was so critical to overall success.
Yeah. So how did you approach that? So when you guys would acquire another company, I guess the decision could be like, hey, let's get them onto our ERP system versus, that's too traumatic. Let's just integrate the data at the BI level.
Yeah, so sort of two things. So you're right, it is very traumatic, and we were in pretty much buy mode, and the order of the day was, hey, let's accumulate these, let's find some tools to help us consolidate so we can produce consolidated financials. We used a tool called OneStream, worked great, great people behind that tool. I would use them again in a second. And then sort of like OneStream was our financials. And yeah, like that was every time we bought a company, one of the first things was how can we, start putting their backlog, start putting their order into a data warehouse so that we can try to, look farther and farther across to understand how the business is operating. Yeah.
So, real quick, just to kind of go back a second, when you joined ACPI, had they already acquired that company? Like, how far into the PE journey
Yeah, so
was
it
it?
was about 6 months after the purchase. I think it was
Okay,
about 6 months after the purchase from Armstrong that AIP were kind of looking to round out the rest. They felt like they had a real good handle on the operating agenda, there's like strategic agenda, as well as like, hey, here are the players we need, right? Like at the end of the day, it's people, right? It's always going to be people that do this work. It's you have to have the right people sitting in the right seats, kind of thing. And so I came in about the same time as the CFO, the COO, and some other folks, and we kind of all landed, worked out great. We all landed in there about the same time. Honestly, I
cool.
I think I started on the same exact day as the CFO and CEO, so it all
Wow,
worked out pretty well. We were all newbies together.
that's
And
awesome.
then yeah, so we kind of AIP brought us in, said, "Hey, here's what we have. Here's what we think. Here's our thesis," and then started putting the shoulder against the wheel and start
Yeah.
pushing.
Okay, so you show up and immediately you say, okay, well, where's all the data? It's inside this ERP. Let's start digging around. Like, what year was that, by the way?
That would
And
have
what?
been like 2012, 2013. It's one of
Okay,
those two. Probably 2013. If I had to go back, put a date. I think it's 2013. Yeah.
okay. And so you show up, you start pulling the data out. Were there certain tools that you were using at the time, or was it just like, hey, export a CSV for me, and I'll play around in Excel, and we'll try to like get our arms around what we're looking at here?
Yeah, we really tried to, my thing was I wanted to keep it as simple as possible, right? I didn't, I didn't want to add too many tools in just because, hey, that's more things to break and it's also more things for new people to learn.
Mm-hmm.
So really, we kept it pretty simple of we were able to use native tools or tools like SQL, CCR, SSRS, just old school report,
Oh
right?
yeah.
Static report. Works great. I still love it to this day. It has value in its little niche. And that was really what we used. We used SSRS to connect directly to the DB2, and DB2 is a SQL compliant database, and so that was really the start of it. And kind of views and store procedures, and we built a few offline things that required a little more processing, right? We didn't want to interfere with the transactional system, right? Which is common problem we have to all of us have to overcome. And that was really where we kept it is let's try to keep it lean and mean, something we can quickly iterate over, because we weren't, again, like anything, there wasn't just a one person had a vision of they could draw it on a whiteboard of, oh, Mike, you guys go and build this thing and it's perfect. It was more of a, hey, we think we need to manage like customer deliveries. How do we do, and we had to really decode that of, all right, well, on time complete is what that's called. And then, all right, what data is available that we could even use to measure it? How could we measure the details below it of, any order gets exploded in the bill of materials down into a whole bunch of messy work orders and subcomponents and all these things. And so that was one of that honestly, that was probably the biggest learning curve, is understanding that schema of like, hey, there's a whole bunch of data inside this AS400. What is it? Where is it? What does it mean? Talking to the vendor that was behind the ERP system to try to understand, we have this concept. We want to build these dashboards. Where can I find the data? What
Mm-hmm.
is its format? Is it in a format that I can use for reporting, or do we have to like manipulate it and do some ETLs and such with it? So that was really the first probably 6 months, 9 months, is kind of drafting those first iterations, and then kind of standing up the top level and then the next level down, and then we we kind of that top level one, and then kind of branched it out of, okay, here are the major areas, and we just tried to drive it down as much as we could, so that the idea was to put a tool, an information tool, into the hands of a shop floor operator or a foreman, that they would know exactly like what was left to complete. Was there anything that fell out? Like sometimes material in a manufacturing process gets damaged, has to be remade, those kind of things. And so that was the idea of how can we make sure everybody has a tool they need to be successful. And then kind of one of the final things, which proved to be one of the most valuable, is building a set of analytics that took a lot of that same data and then gave and put it in a format so that the shop floor understood how to that day's production equaled what they were likely to earn on their performance bonuses, right? Like I've worked in a lot of manufacturing environments where if a performance bonus system is structured correctly, and it's this win-win type of situation where you really allow the shop workers and leaders to kind of control their destiny for the day, and really, make sure that of the things they can control, they are controlling it. And you have compensation that aligns with that. It can be extremely impactful, very powerful.
Yeah.
And we did that. And that was one of the sort of the last, like, all right, that was the last one of those reports that sort of slotted in and said, all right, this thing's great. Um, Go, and we tried to use that same format on all the companies that we bought. That was one of the first things we tried to do, is like, all right, can I take this in thing and like stuff it with data from this new system that we just inherited? And for most of the businesses we bought, that was possible, at least to some degree. Was it
Yeah.
perfect? No, but um, it was close enough to where it made an impact, it made a difference. Yeah.
Yeah. I love what you said. Kind of implied in what you said is, a lot of times people will focus on the technology solution and forget about the people and the
Yeah.
process, right? And so you identified this metric really matters to our customer.
Yep.
Therefore, it matters to our business. And in order to grow our business, we need to satisfy our
That's right.
customer. And in order
Yeah.
to do that, we need to operationalize something, change our process, and incent our people to do the things that then make our customer happy.
That's right.
Yeah, that's
And
awesome.
then, everybody's, everybody has clarity of, I think, clarity is a underutilized word in business of there's too often businesses lack clarity in what is important, what are we working on, what actually moves the needle. And when you can get those things right, and then it's easy to communicate to the business down all the way to a shop floor worker. Everybody like needs to understand why is this thing important, and why does everybody care if it's not where it's supposed to be. Getting that right is so important for a business.
Yeah.
Yeah.
Yeah. Are there any, okay, so as you guys continue to scale out, you would kind of take this framework that you've developed that works well, apply it
Mhm.
to the new company, roll everything up. Like take us through the journey kind of from that point to the acquisition or the eventual exit.
Yeah, so really at one point we had grown ACPI. We had bolted a lot of acquisitions underneath ACPI. I think at that point we were right around 800-900 million for just the ACPI side, and
Okay.
we kind of had an opportunity that the PE firm wanted us to take a look at, which was sort of a what would be classically called a merger of equals. Of, hey, ACPI has reached this milestone, we could continue to buy smaller firms, or we could just partner with another firm that a large company, Masco, would wanted to part with, and form what ended up being the largest private cabinet company in North America. And that's essentially what we ended up doing. Um, that would have been like the 2020. It was around COVID. It was a kind of a weird
Okay.
time, but that was when that merger happened. Was in the 2020 era time scale, and that was, it's ACPI sort of ceased being. Masco Cabinetry was no longer, and the new one was Cabinet Works Group. And that was
Wow.
that was kind of what we carried forward, and eventually took through a process and sold to a PE firm called Platinum Equity, and they operate it still today.
Amazing.
Yeah.
Um, at at some point, did you build out a business intelligence function underneath you?
Yeah,
And what?
yeah. Yeah, so that was quickly. It was one of those like, all right, guys, I'm happy to like write code, but I got other things to do here. I do enjoy writing code, but yeah, we had to very quickly pivot to hiring some folks to help like data engineers. We found a third party team to help us marquee data that was instrumental in helping us sort of mature that practice. Right, I'm not, hey, I got us to a certain point, but I'll be the first to admit I'm not an expert, in building out data warehouses and business, and so that group was able to really take it to the next level, mature the practice. We actually brought in some advanced analytic tools from Tableau that hit the mark really well for a lot of more like ad hoc analysis.
Nice.
To put those tools kind of in the hands of true analysts that you know how it is. So we maintain the static like, hey, dashboards and reports, but also start adding capabilities on the more visualization as well as sort of traditional analytical tools for like a system or a business analyst would use.
Yeah.
Yep.
So the general process was hire an external firm to help us build the kind of the core data warehouse, and then start bringing in team members and tools to kind of self-service analytics with Tableau on top.
Yep.
Did you start with a leader? Like your first hire in the BI space, was it an analyst, and then you kind of built up from there? Or did you start with a leader and then?
Yeah. Great question. So, looking back, I probably should have, if I had known we would have ended up, this large $1.8 billion, I would have picked
Yeah,
a BI leader and just like let him or her build a
build a
whole
team.
practice.
Yeah,
Yeah. But, as it sort of grew organically, it was, hey, let's put a data engineer in here so like could like take all the actual development, the back end development off of me, and then he needed some help. We plugged in a third party, like, all right, let's graduate this to sort of the classical multi-tiered architecture. And then when we eventually merged with Masco, they actually came to the table with their own business intelligence apparatus as well, like fairly mature,
hmm
based in Oracle OBIE, and it worked well, and they were used to using it. And so we kind of for a period of time, all right, let's just we'll maintain these two, and we kind of layered over a consolidation piece on top that kind of sucked data out of those two different data warehouses. And since then, since I've departed, so it's been 3 years, they've consolidated. That was the long term goal is, hey, we have good data over here, we have good data over here. We need to consolidate and collapse this into just one maintainable data warehouse and a set of data models that are the source of truth for the organization, and that's where they've ended up today.
wow.
Yeah.
Yeah. So we've talked a good bit about how the company matured over time, how the solution to find, basically to uncover data secrets.
Hmm.
This is the Data Secrets podcast
Yeah.
after
Yeah.
all, right?
Yeah. Yeah.
And so you've got the process in place, you've got the people, you've got the technology now. Like, are there any stories that you remember where there was something that was like a problem in the business, or it's like, golly, we can't really figure this out, but then the data really like finding the right KPI or finding the right insight from the data
Yeah.
led you to make a big leap for the on the business side?
That's a great question. There are some, certainly, but like all things in life, you always get surprised. And I think one of the interesting surprises that we ran across is while we were over here focusing on OTC, on time complete and building all those operational things on the sales side, on the customer side, we had this assumption that, hey, the biggest customers are the best customers, and those are the guys and gals carrying the sort of load, quote unquote, for the company. And someone, I think it was one of the sales leaders, like, hey, I'm not sure this assumption's 100%. Actually, it came from one of the AIP partners. Come to think of it, and they're like, I'm not sure your guys' assumption is 100% correct. Is there any way we can start looking at building some kind of contribution margin, basically what ended up being a customer segmentation type of analysis or data model, and like you would expect in any type of, once you build that and you start looking at it, yeah, there was definitely there were definitely accounts that were large. They had a lot of volume, but they were far lower margin. Once you actually built up a contribution margin, they were far lower margin than the business realized, right? To some degree, some of them were negative margin. And so that was one of those surprises of, okay, uh, I'll probably use that same, make sure that question gets asked earlier, in every subsequent engagement and endeavor. But yeah, that was surprising how we were dead set, me included, of like, oh, that customer those guys are great. And when it really came to stacking it all up and putting everything in there, like, they're nice people, don't get me wrong, but they don't make any money for the business. So it's like, hey, um, we had to make some tough choices there because at the time we were very capacity constrained as well. And so it was like, hey, we need to make sure we're doing the most we can to sort of maximize profit. It's a cyclical business, like a lot of manufacturers. Everybody in building products is this way. Of when you can do well, you need to do well because it'll go the other direction on you as well. So that customer segmentation model was probably the most interesting bit of work, and it ended up sort of creating its own set of analytics and tools, and eventually we got it to a point where as soon as every order was imported and brought in, management knew within minutes of what the expected contribution margin was going to be for that order, and we had some sort of logic, like tree logic, to sort of, hey, you're not going to, like, hey, you've already accepted the order, right? You've already taken, but it's more like, hey, we need to, like, have some people take a look at this account and revisit it. And so
Mhm.
so that was probably the biggest secret, that unlocked a whole bunch of margin that was just leaking through the bucket. The old, like,
Yeah.
hey, where's our bucket leaking? That was a major one. I would say, you know, probably that's the most. The other, Canam Steel had a similar situation to where it was more the inverse of management felt that a situation existed, and we used data to help validate that, which
Mhm.
was, hey, uh, we felt that the more complex jobs were really good at dealing with those complex jobs, and we felt that they were more profitable, right? Because we were able to command a higher price for them. And that was another case where, with some analysis, that is proven to be so, and it's actually even carried, like that. That's part of the core strategy going forward for that firm. Yeah.
Nice.
Yeah.
Nice. What about, so if we look at the dark side, and go dark here for a second with the
Yeah. Yeah.
data horror story, uh, what was there ever a scary moment or a decision that was made on some bad
Yeah.
data?
Right, like, mistakes are always the best teachers, aren't they? And they're humbling as well. They have that benefit. Yeah, at CabinetWorks, we definitely had a mistake like that. We had built this beautiful quoting tool, Salesforce.com based, all this great, looked great, worked great, very fast, very reliable, and put it into production. Worked for weeks. Actually, I think it worked for a couple months, and then we realized, like, hey, this like the logic's all wrong. And it was one of those, like, hey, we thought it was wrong. Some edge cases came back to really bite us in the, and it, so that was one where we ended up underpricing a whole bunch of jobs, and there weren't any alarms, there weren't any flags, there weren't any business rules that, like, gave us visibility to that. It was just sort of like, hey, that thing works great. Let me know how it works out for you. And it wasn't until some of those things started coming into our backlog, and it was sort of those tools that analyze the backlog is where it started coming out. It was a gut punch. We had to stop quoting. We had to scramble to fix the logic, and we were very customer focused, and we weren't going to go back to those customers and say, oh, sorry, that quote, pull the quote out from underneath them. It was, no, this is something we just owned. We took the hit and tried to learn from it, and it actually ended up being one of the catalysts that we created a system that we called the business process management, business process monitor system, that really, it was just a rules engine. So it was, hey, this thing was constantly taking rules that we clearly identified essentially it just overlaid guardrails over a lot of the process, and we expanded it to kind of all over the business after a pretty short amount of time to give us that confidence of like, hey, it's great. We're going to go full forward and move as quickly as we can, under that, very much that fail fast and fix mentality. A lot of PE firms share that same mentality as like venture capital is, but we're not going to waste this opportunity to not learn from this mistake. And that BPM system ended up being awesome. Like it was. I'm not sure we would have, without that need. I'm not sure we would have come up with that, but it ended up being extremely valuable.
Nice. Did did the quoting tool misquote because of some technical issue or lack of business understanding, or like what was the root cause of why that
I
failed?
think it really, if you come down to it, it ended up being we didn't fully understand all the use cases. Like, if you were to say, hey, we thought it was these 10 user stories, those user stories actually had like someone, it was a lack of understanding of the actual process. And when it got interpreted by, we had a third party do a lot of the development for Salesforce.com, and it was kind of looking back, you're like, well, they delivered the tool exactly as we asked them to deliver it. The problem was it didn't actually account for all the situations correctly.
Yeah.
So it was very much a, if we had to do it over again, it was a lack of diligence. It was a lack of, sort of putting in the time on really understanding all those use cases. In reality, instead of the 10 user stories, there were probably about 20. I think we got it's like the 80-20, right?
Yeah.
We nailed those 80, and there was the trouble was in that 20 that we just
Yeah.
really didn't even know truly existed because we were moving fast, and that's what happens when you move fast. You're gonna make mistakes.
Yeah.
And this is one where, yeah, that one sucked. That was a mistake we had to eat for a little bit of time.
Yeah.
Yeah.
All right, so let's pivot to the kind of what you're doing now with Cold Iron Capital, and thinking about, so a lot of times when people think about making an investment in technology or BI specifically, right?
Hmm.
It's kind of like plumbing, right? It's like
Yeah.
you got to build the thing and then start to use the thing in order to see the value from the thing. And so
Yeah.
sometimes
Yeah.
that ROI is it's hard to promise on the front end because it's you don't know. That's why we call this podcast the Data Secrets Podcast. Is you don't
Yeah.
really know what the data is going to be able to tell you until you do it, until you invest in it. So how do you think about investing in data solutions and driving ROI from those?
No, awesome. Great question. Because as you know, any of these projects can get extremely expensive, like really quickly, right? And
Yeah.
this is before you even buy all the tech. So I think I like to think of it no different than any other capital project. The tool, the endeavor needs to solve a specific business problem. It needs to unlock throughput, improve margin, reduce risk. It needs to solve something that's already been identified as a problem, right? Like the classic saying is, a problem that's well defined is halfway solved. And I think, not enough, and certainly I'm guilty of this in my entire career of not spending enough time really defining that problem, really understanding, what let's be firm on what are we trying to solve, and then basing and sort of jumping off from there of, hey, if we understand a process, and whether you use lean or theory of constraints or something, some mental framework to understand, like, hey, here's the constraint we're trying to alleviate, or here's the, if we only knew this information, we would more consistently make better decisions. That is where those projects need to start, and I'm always much more excited about approving and underwriting those kind of projects or firms that are like clearly well defined the problem that they're actually going after and trying to solve. Too often it's just, hey, teams know they need to put in business intelligence, so go do that.
Build me a dashboard.
Go build me dashboards. And it's like,
Yeah.
well, you know how it is. Well, I could put a lot of stuff on a dashboard. It might not be useful. It might not tell you anything. It might not change anybody's behavior. And so if a KPI or a tool doesn't fundamentally change behavior of the person using it, it's probably noise, right? Like and that's the thing it's supposed to do, is it's supposed to trigger some kind of action and a decision, right? Or at least at the
Yeah.
very least, hey, I know this thing is still nominal. It's still in flight where I expect it to be. Like that's an okay use for a tool too. But yeah, if we're not really attacking a real problem, man, those just almost always end up being a disappointment on a whole bunch of levels. Yeah.
Yeah, I feel you.
Yeah.
Is there anything else you want to talk about on your kind of your investment thesis or like what you're planning to do over the next 5, 10 years?
Yeah, no, man, this next 10 years, I think I'm actually really pumped. So obviously, a lot of my energy going forward is going to be cold iron capital and some other sort of similar endeavors along the same line. But as I look for early stage or product based firms, I'm really looking for people that are doing like again solving some unique problem. They're trying to do it with intelligent systems, whatever that. There's a whole bunch of AI. People say AI, but there's a whole mess of, there's a whole bunch of stuff there.
Hmm.
Data in those spaces of I've always really liked both. I like data. Intelligent systems is another one. Cyber, security itself. I think kind of pivoting forward of I have a lot of interest in this venture capital, and I think there's some interesting things going on there, but I'm also really interested in, no one talks, like we're all talking and rushing as quickly as we can to integrate AI, but there is a ton of security implications with that. Like,
Yeah.
these projects, as they get implemented, they're all new code bases. A lot of them are, wrappers and things that are done very quickly. And so there's really not a week that goes by that I don't see some poor vibe coder that launches a tool and like, oh man, I've made success. I'm getting traction. And the poor person, ends up exposing their S3 bucket because they didn't know any better, and it's like, hey, yeah, good for you guys for delivering a product and you did something that people want, but because either you or the tool lacked that overall context and know like, hey, you're not quite there yet. The tool works, but you need to really operationalize it. So there's
Yeah.
there's a bunch of interesting companies. Obviously, the players like AWS and Microsoft, Google, clearly making a lot of moves there. Tools. There's also some startups like LangChain that are trying to build some specific tools to try to address like guardrails. Like, how do we, once an AI system is deployed, how do we ensure it sort of stays inside of some given parameter set, and doesn't drift over time, which is a common problem. So there's a bunch of stuff I think that's really interesting there that just personally I'll be spending more time with. In this data space, though, one thing I don't know if you guys have seen it as much, but I've seen it with other firms that are dealing with a lot of analytics is RAG, the retrieval augmented generation, right? Hey, there's this new sort of database that's now being sort of brought into a lot of data stacks to facilitate these Gen AI tools and workflows. And these RAG systems are vector database, vector style or vector database systems that SQL servers trying to add one, but like Pinecone and others are out there that have like Supabase has one now as well. That all right, companies are rushing to implement RAG because that's the right now the quickest way to really cram a bunch of proprietary information into a database that then an LLM like an OpenAI can go and fetch information out of so they
Hmm.
can provide better answers, specific to a business. But so yeah, that's cool. That's great. Those are fun to build. Those are really interesting. But it just there's so many things to learn. There's so many, what are the best design patterns? What are the right ways to do that going forward? So
Yeah.
like that's the frontier. That's still to be determined. And so I'm really interested in how that stuff evolves and where that goes.
Yeah. It's interesting. There's this concept of AI readiness, right? And so
Yeah.
effectively, AI readiness is traditional BI. It's like get all your
Yeah.
data into one
Absolutely.
place, right?
Yeah, yeah.
Uh,
It's one place, some kind of schema that I can define it.
right.
Yeah, like you're absolutely right. So I think firms like yourself and there's a huge opportunity there of so many firms still, like those firms that put in that hard work of laying that foundation over the last 10 years or five
Hmm.
years, whatever it was. Oh man, they're going to have like such an advantage going forward because they're already starting from a foundation that isn't super expensive or super difficult to start from. and I think the smaller firms actually have an advantage there in a lot of ways, right? Like a huge mega firm that just is, 10, $15 billion, super complex. Data is everywhere. I'm sure you've seen those. It's like, wow, I don't know how you're going to get all that stuffed into any AI. But the smaller firms, they're smaller competitors. If they're smart about it, I think they can just move a lot faster, right? And like speed kills. So I
Yeah.
think there's some small people, they're going to, see that and realize like, hey, we have the data and we're able to have the right set of people or partners available to do something with it, and they're going to be able to move forward rapidly, much more rapidly than their competitors anyway.
Yeah.
So, yeah.
Yeah. I kind of think about like if you were at ACPI, like if you were just joining ACPI now, right? Or a company like that,
Mhm.
right? And so they've got their source systems, there's no BI layer on top. I think the speed at which you could stand up a data warehouse and start providing insight is just so much faster
It's so
today than
much
it was.
faster. Yeah.
Yeah.
It's way faster. And the key piece there that probably isn't, nobody really wants to talk about this because it's not as sexy either, is just bolting on some AI tool to an existing process is, sometimes will probably yield a good outcome, but more often than not, what is it, like Bill Gates said, automating an inefficient process is just going to, it's just going to amplify the inefficiency. And
Yeah.
there's, I think, so many of us, you know, that have dealt with these systems over the years. We think, oh, well, management just put AI on it, why AI, and it'll solve it. It just no, no is pretty much the answer there,
Yeah.
and it's we'll need to do complete redesigns in some cases of entire processes to really make use of it. Otherwise, it won't be adopted. It'll just be some bastard, child, sort of stepchild off to the side that
Yeah.
costs a lot of money and it doesn't really get any usage. Doesn't change anything. But like those smaller firms are definitely an advantage, Nathan. Like it, if they can. And I think it probably comes down to willingness to take some risk and willingness to hire some people that know what to do, or at least hire some firms that can, you know, pick some pick some existing. It comes back to like you have to be solving a real problem. Pick some existing bottleneck. Whether it's, hey, we don't have enough hours in the day to do all the quotes that people ask us to do. Okay, start there. No business ever failed because they had too many sales, right? Like typically. So, if some firms can pick the right projects and they're lucky enough or they're diligent enough to find the right partners to help them implement some smart solutions, intelligent solutions, yeah, they're gonna have, at least for a period of time, they're gonna have a pretty significant advantage.
Yeah. Yeah. One thing I've kind of observed over the past couple years is firms kind of pausing on investing in data infrastructure because they're kind of assuming that at some point AI will just solve it all for me. And so I just kick the can, And
Yeah.
yeah, what would you say to a firm that's in that situation or thinking that way?
It still comes down to um, AI is just one of the tools. That's it. It's just one of the tools that'll be inside your application portfolio. Are you going to walk away from your CRM? No. Like the CRM provides the structure and the scaffolding and the process workflows to run that part of the business,
Yeah.
and that doesn't change.
Yeah.
What companies need to spend their time right now doing is, hey, analyzing what is our strategic agenda versus where is our current state of processes, right? Like, hey, if we have a real aggressive growth agenda, is our sales side really, do they really have the tools and are they empowered to meet or have a chance to meet those sales objectives, those growth objectives? And start doing that work of, all right, here's A, B, and C processes that need work. We've done the work to map out the flows. We understand, like, we have a bottleneck here and here. And then it's, once you have that point, you're in a great position to go out, find partners, find people that can help you. Yeah, maybe an AI tool exists to solve that. But you know what? Sometimes you just need to redesign the process. Maybe your process just sucks. And the highest leverage thing you can do is just redesign the process because that's fast and cheap. So I think, like any of the, I love the tech. I love AI. I've been enamored with artificial intelligence since I was a kid reading sci-fi, right? Like
Yeah.
And so I couldn't be more excited about this period of time. But the reality really is for a lot of companies, yeah, there's some tools that'll help you win the market, but it doesn't take place of like the traditional like business improvement. There's what are the processes, what needs to be fixed, do you have the right players? There's a lot of upskilling like that is a thing that I think people really underestimate is the level of upskilling that everybody really will need over the next 4 to 5 years
Yeah.
of things like, although I'm not a huge fan of Copilot, but like the idea is there of, there should be all the native tools they're now building in some type, whether it's Copilot with Microsoft's tools, Oracle has it, SAP has it, NetSuite, they're all starting to,
Mm-hmm.
Salesforce has it with Einstein and some other things and their agent system. Yeah, it'll like that's usually where firms will find the easiest, like the least amount of friction is to try to leverage the built-in tools, right? Like Gartner said the same thing last fall. I'm not coming up with anything new here. It's more, yeah, if you have an ERP or a CRM that has the embedded tool set, learn it, use it, find ways to incorporate it into your workflows. That's usually your best bang for the buck.
Yeah.
And in a lot of cases, you're already paying for it with your licenses. And then, at that point, sort of maturity, the next level down for maturity are those points, those use points. Like, hey, I have a use case, a specific use case that I need to either there's an off the shelf, which sometimes there are, but more likely it'd be I need to assemble some collection of workflow automation and LLM models.
Yeah. Yeah.
Yep.
Nice. Well, Michael, as we look to land the plane here,
Yeah.
where, if people want to connect with you, learn more about your firm, like what's the best way for folks to connect? And
Yeah, I'd love to hear from people. I have I love connecting on LinkedIn. LinkedIn is probably the easiest place to find me. I would say if you just search Michael Franklin and Cold Iron Capital, I'm the only one that pops up. So just hit me up there. I accept almost every single request, save a couple obvious spam bots. But that's a good place to hit me up. And then you can also email me. So just Mike at coldironcapital.com. Hit me up there and happy to start a conversation with anybody. Sure.
okay, yeah, who would be kind of the person you'd love to hear from? Is it a CEO of a
Yeah.
company that's of a certain size,
Yeah,
or
yeah, good question. So I would say first and foremost, I'm happy to help anybody. I'm a firm believer in reaching your hand down and helping other people climb up the ladder. So if you're ambitious, you want to eventually be in a CIO chair or a CTO, something like that, hit me up. Happy to use whatever resources I have to help. The other is, yeah, CEOs, board members, PE partners that are like, hey, what do we do? What do we do with AI, digital transformation? Any questions like that? Happy to have a conversation. Again, there's a lot of pain and suffering that I've gone through, and there's no reason other people should have to go through the same. So happy to, at the very least, help people avoid those mistakes that I've made. And if people just want to reach out and have a conversation about AI, happy to do that too.
awesome. Well, thank you so much for your time, Michael, and
Yeah, happy to be here. Appreciate it.
awesome. Well, that's the pod.
All right.